All right, let's talk about the currency market there. Indian rupee has been quite resilient and we've seen good gains coming about in 2017 for the Indian rupee. Let's get a better sense on what can be the levels to be watched out this year or in the near term. We're joined by Abhishek Goenka, who's the founder and CEO at India Forex Advisors. Hi Abhishek, good morning. Thanks very much for joining us on BTVi. Tell us first up, what is the reason that the Indian rupee is going from strength to strength despite of some kind of strengthening seen in US dollar, but Indian rupee has been very resilient of late?
I think, the major reasons, of course, has been the elections, which has been the main driver. Apart from that, there's been immense liquidity in the market, and we have not seen RBI intervention in the markets, which would ultimately stoke inflation if they are not able to stabilize it. We have seen immense amount of inflows. I mean, 8.7 billion just came in the month of March alone, which is very, very high. So these are a few points. Plus, the Fed, which was extremely hawkish previously, and the reforms that was being taken by the US and the expectations that the markets were building up on healthcare and tax policies, that did not, have a final way out. So the markets sold the dollar, and the rupee became double strong because of that. And of course, a lot of market issuances brought a lot of money, QIP, masala bonds, etc., etc. So because of this, rupee became extremely strong, and I think it's the fourth, strongest currency in the world today in this 2017. But having said that, recently the levels the rupee has seen slightly overstretched. Looking at the overall inflation differentials between India and US, which still holds in 200 basis point, which was earlier around 700, 800 basis point. So of course, rupee has got strength, but then these levels, I think, is kind of overstretched, and possible weakness towards the 65 half in the near term is quite doable. Medium term, I think 64 half to 66 half could be a level seen in the next 3 to 4 months.
Right. Abhishek, tell us, there was a talk that, Indian rupee will be touching that mark of 70, but that's not been the case. The macro data is pretty much stable at the moment. Tell us, do you see further depreciation from these levels, or there could be bouts of volatility which we could witness in 2017? Because if I go by certain reports, couple of brokerages are of the view that there could be intermittent bouts of volatility in terms of rupee for this year, either on the downside or on the upside. But what's the long-term view coming in on rupee? Do you think it is fairly valued at current levels, or it is a bit expensive to its peers?
I think looking at the markets and the way it's got strong, and looking at how the global currencies have performed, I think it's got a little edge because of the flows in the elections euphoria. Now the markets would be looking at something new, because these news is old news, and now to make the rupee further strong, I think there has to be something very, very strong. So if you maintain the view that the US is going to hike rates, and overall trend of the US dollar in 2017 would be positive, then I think we would not see a very, very strong rupee. I think looking at the inflation differentials, which is still, 200 basis points plus in case of India, I think the rupee should depreciate 2 to 3% every year. Earlier it used to depreciate 4-5% because the inflation differentials were 700 basis points. So giving the benefit of that, I would not say that rupee is going to appreciate a lot, but then definitely it's not going to depreciate the way it used to be in 2013, 2011 levels. So I think 2 to 3% from the current levels should be the fair level of the depreciation.
Right. Abhishek, watching out for the RBI policy today, no rate cut expected, but there could be some measures as far as liquidity management is concerned. In case we are likely to see that, could that have any impact on the rupee movement?
Of course. I mean, in the last few policies, if you have noticed that since earlier the markets were expecting an interest rate cut, and that didn't happen, and rupee immediately started appreciating from 67.30 levels to 66.60 levels in no time. So, of course, RBI policies are making a very important impact. I mean, today the liquidity is so high, and the inflation expectations are building in the market. So, if they give any statement where there is concern on the inflation, and the market starts pricing in any hawkish stand from the RBI, definitely the 10-year will start going up, and immediately the rupee will also start strengthening a little bit, because when interest rate starts going up a little bit and 10 years starts going up, the market starts speculating that interest rate differentials between India and US starts getting favor for India, which can attract a lot of money in the market. So I guess if any such stance by the RBI on a little hawkish or the inflation expectations building up, then rupee might get a little strong. But again, I would like to reiterate that the levels that we are in, I mean, we have seen a lot of appreciation and we don't have much of downside room. So I think 64, 70, 80 should be the bottom. And on the higher side, 65, 50 is quite reachable.
Right. Abhishek, one topic which has been discussed a lot, that is RBI's intervention into the currency market. There is a lot of liquidity in the system owing to demonetization, because of which we've not seen a lot of interference from RBI. But as and when this liquidity fades off, do you see RBI coming back into currency market, and that participation which we used to see earlier could come back?
See, ideally, there are two ways to think about it. One is, excess appreciation, of course, is not good for the exporters. And in a highly competitive market like us, the way things are going, and if you let the rupee strong for a long period of time, it ultimately disbalances the entire export scenario. But at the same time, the RBI also have concerns on imported inflation. Of course, India is a net importer. So that way is also at 64.5, 65 levels, and oil prices slightly inching up. RBI might also look at, RBI and the government might also look at the scenario where a stronger rupee is ultimately benefiting the inflation and might help in improving the trade deficit. So, of course, till the time the liquidity is abundant, RBI is not intervening in the market aggressively the way it used to be. The foreign exchange reserves have not gone up. It clearly signifies that it's only there to maintain intraday, volatility, and not getting aggressively in the market and buying dollars and pumping excess liquidity in the market till the time they have a way to sterilize it. So I think till the time the liquidity doesn't get reduced in the market, RBI would be, little out of the market and not aggressively intervene the way it used to be. So that's the reason we are not going to see bouts of intervention from RBI, and the recent appreciation also we didn't see a lot of interventions happening. I mean, intraday a little bit, but not significantly the way it used to be earlier.
Thanks a lot for joining us this morning. We'll leave it at that. That's the outlook coming in on the rupee, likely to be in a range between 64.80 to 65.50. That's the view from Abhishek Goenka of India Forex Advisors. Getting back to the markets right now, seems to be fairly stable at the moment. Pre-open indicating a quiet start, but this is what we saw yesterday as